we go across to Ashish Gupta. He's a CIO of Axis AMC. Ashish, we always love our conversations with you, and thank you so much for speaking with us here at NDTV Profit. How are you looking at the markets right now, considering that there is a huge policy push, there is an intent for reform, there is also clearly an intent to utilize the tariff attack as an opportunity for more reform, but the markets don't seem to be saying it.
So, thanks, Tamana, for having me today. I think you listed out all the points precisely. I think we have had consistently a, a strong push both on the fiscal side as well as monetary side now for nearly 6-8 months. And in this period, market valuations have also started to moderate. As you know, in the last 12 months, broadly, both the large cap and the mid cap index are flat. We are starting to actually see valuation moderate. The good news is that we are also now starting to see earnings downgrades moderate. I think the trigger point for the correction in the market was that in the last 4 quarters, we had consistently seen earnings downgrade, and earnings estimate, for example, for this financial year had been cut down nearly by about 10%. And last month, for the first time in 12 months, that we have seen on the pace of downgrades actually slow down, and actually market earnings estimates have been upgraded by about 1%, primarily to reflect some of these policy decisions like the GST rate cut and the positive impact it's likely to have on the consumption side over the next 6 months. I think if this continues to build on, and this will get clearer over the next 2-3 months, market should find a foothold. Earlier in the program, you spoke about it as well, that one overhang remains on the market is a large amount of equity supply, both in terms of the IPO activity as well as stake sales from promoters and private equity. And I think this is the main reason that despite strong domestic flows, we haven't seen the market really perform as well as it did in the past couple of years.
So then what is the idea here, or what is the strategy here, Ashish? I mean, you look at, for example, what Axis AMC is doing, you're sticking to the tried and tested, the large private banks continue to be top of the pile. Is that the strategy that you'd like to take forward?
So we continue to actually straddle across market caps. Banking is actually one of the few areas we are much more large cap focused. And the primary reason is that given the amount of technology spend that banking now needs, it is going to be increasingly difficult for the mid-size and smaller size players to kind of compete with them. So whether it's public sector or private sector banks, we continue to actually within banking focus on the larger names. But if you look at some of the other sectors, for example, hospitality, if you look at auto ancillaries, real estate, etc., we are actually happy to be in the mid and small cap names as well. So I think it's really the market cap cohort is more reflective of the sector, where the leadership in the sector lies, and the potential of the companies.
Fair enough. Fair enough. I think we have sort of put that into buckets, and we have details of what you have in your fund. So just trying to understand the mindset at this point more than what you're doing in the fund. The Atma Nirbhar theme, how are you playing that? And I see that Dixon is something that everyone's very excited about. We just had a detailed conversation on solar module makers and the backward integration that they're doing. That's clearly going to be a big policy push. Is that a theme that you see worth riding on as well?
Yes, so I think there are certain areas where there is push. You spoke about renewables, and There are multiple ways to play this. One is, of course, some of the module manufacturers where we have a stake. We actually, because of this large solar capacity coming up, and actually a lot of capacity is coming up concentrated in a few states, you are actually going to see large investments on the transmission side as well. So we are overweight on some transmission equipment suppliers as well. Even on the EMS space, contract manufacturing, there are companies that are doing well and now actually backward integrating into component manufacturing. So I think that is going to provide enough fillip and potentially some improvement in margins to these companies.
Just want to talk about IT and how you are seeing IT right now, Ashish. H1B, two schools of thoughts really here. One, that H1B is not a big deal. Indian IT companies have already started, scaling back on their dependence on this particular visa category. But then the second is where the intent is coming in from the US government, and does that signal trouble? What would be your take on the IT pack right now?
So I think I'll agree with your former statement that H1B is kind of not necessarily the deal breaker for Indian IT companies. If you see the largest Indian IT companies, I think the number of H1B visas they use is 3 to 4,000 only, right? So I don't think that is the biggest challenge. Having said that, we continue to remain underweight on IT. Our concern has been that their demand drivers are not domestic, discretionary spending by U.S. corporations. The outlook is uncertain, and more of it is going towards AI-related spends. On top of that, there is clearly some potential risk coming because of AI adoption and what that will mean for the long-term outlook for some of these companies. So we continue to be underweight on IT sector, but not necessarily because of the visa issue.
You spoke about AI, Ashish, and perhaps one of the reasons that India is underperforming and staying out of the global bull run that you're seeing in various markets is because there is no clear AI play. Are you right now hunting for some of those AI opportunities?
Yeah, so I think unfortunately that's a challenge. I think in India we really don't have a play. I think the exposure to AI and more broadly to innovation that Indian investors therefore will need to seek is through some of the funds that invest internationally. So we have a couple of our funds that have allocation to these names both in US and China. But you are right, that is a challenge for India. And actually, I was seeing some statistics that over the last 2 years, even in the US, a large part of the market cap increase, nearly, if I recall correctly, 60% has come on account of AI related names only, right? So I think globally, that's really the big theme that is being played at. And if you see incremental capex that is going globally, AI and data centers are attracting a majority of it.
Okay, what are the top favorites right now as we build out? I would say this is, let's take shelter portfolios is what everyone needs to build out right now. At least preservation of capital. What would be the strategy, the top favorites in this kind of a portfolio?
So you already mentioned financials, and I will just supplement it that in addition to the large banks, we like some NBFCs as well. We continue to like names in the consumer discretionary space. We are overweight domestic sectors like real estate, travel, hospitality. Within healthcare, we like themes like hospitals, CDMO, and some GLP-1 place. Telecom is another sector we are overweight. Of course, the number of names you can look at in that sector are relatively limited.
Okay, thank you so much, Ashish Gupta there, CIO of Axis AMC, on how to take cover and duck when things are looking turbulent. Of course, the long-term story continues to be very, very bullish.